You're listening to AI PRISM from Seoul Economic Daily.
It's Tuesday, May 12. I'd like to share some thoughts about Front Page Daily. So today's deep dive into the Seoul Economic Daily asks, well, kind of a wild question.
Yeah, it really does. It's essentially asking what happens when, an entire country's financial reality just completely outgrows the laws written to govern it.
Exactly. I mean, we are looking at a stock market that's being carried by just two companies, and how the government suddenly became a massive shareholder of a video game empire.
Completely by accident, I might add.
Right. So if you're looking at your portfolio today, you might think the market is booming, but there is a serious tension under the hood.
There is. It's a tension between speed and structure. And, we're seeing this disconnect everywhere, starting right with the stock market. The KOSPI, which is Korea's main exchange, basically their S&P 500, just hit a record 7,822.
But the way it got there is just wild. Over 3 trading days, foreign investors dumped 15.53 trillion won.
Which is about 10.9 billion US dollars.
Yeah, a massive amount. Yet retail investors just stepped in and swallowed almost all of it. They bought 12.8 trillion won, so roughly $9 billion. Wait, how are everyday retail investors absorbing that much supply? Are people really just flush with cash right now?
Well, no, not exactly. They're actually using a mechanism locals call Bit 2.
Bit 2?
Yeah, it's the Korean term for leveraged retail buying. It is pure fear of missing out, but funded by debt. People see others making money, so they borrow just to get in on the action.
Oh, wow. So it's like everyone on a ship is fighting for a spot on a lifeboat, but they're borrowing money to buy the ticket while the ship is already tilting.
That is a very good, if slightly terrifying way to put it.
Because if you look at the market breadth, it's incredibly narrow. I mean, only 151 stocks went up, while 738 went down.
Right. The entire index is basically resting on the shoulders of just 2 memory chip stocks, Samsung Electronics and SK Hynix.
Wow.
Yeah, and when an index relies that heavily on 2 tech giants, the whole risk profile changes. The capital concentration is just intense.
So retail investors, literally fueled by debt, are overpowering the market. But the government isn't just struggling with financial concentration, right? They're also losing control of geographic concentration.
Exactly. They've been trying to fix the fact that practically all of Korea's money is in Seoul, but that effort kind of backfired recently.
Right. What happened with the Ministry of Economy and Finance?
So the ministry has been trying to push companies out of the capital by expanding regional tax incentives. But they just abruptly dropped a major part of that plan.
The differentiated corporate tax rates, right?
Yes, exactly. The plan was to apply lower tax rates in those outer regions.
Wait, why drop it? I mean, I thought the whole point was to lure businesses away from Seoul.
Well, because of how easily location-based tax structures can be gamed, they realized there was this massive risk of cherry picking.
Oh, I see.
A business could just register, a mailbox headquarters in a rural low-tax area to get the rate cut, while keeping their actual operations and workforce right in Seoul.
That makes sense. Policy intent crashing straight into financial reality. And now you can actually see that friction hitting the government's own balance sheet.
Oh, definitely.
Let's look at KAMCO, which is Korea's state-run distressed asset manager. They function a lot like a national bad bank.
Right.
They just booked a 1.4 trillion won valuation loss on a pandemic debt relief fund for small businesses. That's about 990 million US dollars. But wait, if KAMCO's a bad bank, isn't their whole job to eat losses? Why is this suddenly a big deal?
Because for a long time, the real value of these pandemic loans was basically hidden.
Hidden how?
Well, KAMCO bought these distress loans at face value to support self-employed workers. But eventually, auditors force you to face the music and recognize the actual recoverable value of that debt.
So this loss is a sudden, highly measurable hit to public finance.
Exactly. The hidden costs of policy are finally surfacing.
Wow. And that brings us to the second balance sheet headache, which is honestly fascinating. The Ministry of Economy and Finance is currently selling 1.0227 trillion won worth of shares in NXC back to the Nexon holding company.
That's roughly 720 million US dollars. And this situation perfectly illustrates laws failing to match reality.
How so?
It comes down to Korea's inheritance tax, which can be up to 60% for large business successions. It's the highest in the OECD.
60%.
Yeah. So when the Nexon founder passed away, this rigid tax structure forced his heirs to pay their nearly $5 trillion tax bill, which is about $3.5 billion in stock rather than cash.
That is wild. I mean, imagine the tax authority knocking on your door, and instead of taking your cash, they walk away with your video game library.
Right. That is basically what happened here, but to the tune of billions of dollars. And the government was suddenly saddled with this massive, illiquid 30% stake in a private company.
Which gave them no controlling interest, I imagine.
Exactly. And they couldn't easily find a buyer. So now they're finally unwinding part of it back to the company itself.
Wow. It leaves you with a really critical thought to mull over. From retail FOMO, driving the KOSPI on borrowed money, to geographic tax loopholes, to the state accidentally absorbing massive corporate equity.
Yeah, it's a lot.
You really have to wonder if Korea's traditional regulatory frameworks are becoming fundamentally out of sync with its modern financial reality. That's today's AI PRISM, Front Page Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.